A 401k rollover is a tax-free way to move retirement funds from one qualified account to another. This video explains how to transfer your 401k from John Hancock, now part of Manulife, to Fidelity. The goal is to consolidate your savings, potentially reduce fees, improve investment options, and maintain the tax-deferred status of your funds. There are two main types of 401k rollovers: direct and indirect. A direct rollover sends funds directly from John Hancock to Fidelity without you ever touching the money, keeping it tax-free and penalty-free. An indirect rollover involves you receiving a check from John Hancock that you must deposit into your Fidelity account within 60 days to avoid a 20% IRS withholding tax and potential penalties. The IRS allows only one indirect rollover per account every 12 months. Always choose a direct rollover when possible to minimize risks and complications. Before you start the rollover process, collect your John Hancock account details, including your account number, balance, and beneficiary information. Then contact Fidelity Customer Service at 1-800-343-3548 to open a new IRA, which can be traditional or Roth, or another 401k account. Make sure you have your Social Security number, address, and funding source ready. Now that you have gathered your information, it's time to initiate the transfer with John Hancock. Log into your John Hancock account online or call them at 1-800-225-5291 to request a rollover form. When you contact them, request a rollover form specifically. Clearly specify that you want a direct transfer to Fidelity to avoid any tax complications. Make sure to have Fidelity's routing and account numbers ready to provide to John Hancock. Emphasize that you want a direct rollover to avoid potential tax implications from an indirect transfer. This direct rollover process ensures your funds transfer securely without triggering taxes or penalties. Step 3 involves completing and submitting the rollover paperwork. The form from John Hancock requires careful attention to detail. Fill out all sections accurately, including personal information and account details. Sign the form as required, and for larger transfer amounts, notarization may be necessary. Submit the paperwork according to their instructions to avoid any delays in the rollover process. Now that you've initiated the transfer, it's time to monitor and confirm the rollover. Direct rollovers typically take 3 to 7 business days to complete. Monitor both your John Hancock and Fidelity accounts regularly to ensure the transfer is processing correctly. You'll receive confirmation from both providers once the transfer is complete. If you chose an indirect rollover, deposit the check into your Fidelity account promptly via check or ACH to avoid penalties. As you prepare for your 401k rollover, there are several important considerations and potential issues to keep in mind. Be aware of potential outgoing fees from John Hancock, which typically range from $100 to $150. These fees are charged when funds leave their platform, so factor them into your decision. If your assets include employer stock, it's crucial to consult a tax advisor before proceeding. Rolling over stock could trigger capital gains taxes if not handled properly, potentially reducing your retirement savings. Double-check that all assets are transferred accurately. This includes cash, mutual funds, and any other investments in your account. Incomplete transfers could leave funds behind and complicate your retirement planning. According to the Investment Company Institute, Americans rolled over $784 billion in retirement assets in 2024, with 70% opting for direct methods. This highlights the scale of rollovers and the preference for direct transfers to minimize risks. These considerations can help you avoid common pitfalls and ensure your rollover is successful. Always review your specific situation and consider professional advice for personalized guidance. Consolidating retirement accounts is becoming increasingly common. Future tools will likely include AI-driven automation to simplify paperwork and identify tax risks, potentially reducing transfer times. Fidelity's low or no-fee options, including zero expense ratio (ZR) funds, are attracting more users. Experts recommend consulting a CPA to avoid tax pitfalls, especially with indirect rollovers. NerdWallet's retirement expert Ken Nuss notes in 2025, rollovers are a smart move for fee reduction, but consult a CPA to avoid tax traps, especially with indirect options.